The stock market is rallying on the expectation that easier money is just around the corner. So the market expectation is that the Federal Reserve is going to start cutting interest rates in 2.5 months. On top of that, President Trump is expected to nominate a new Fed chair to replace Jay Powell, someone likely to favor aggressive rate cuts. Naturally, both developments are being seen as big positives for the stock market. Let's kick things off with interest rate cuts. The Federal Reserve held its last meeting on June 18th, where they chose not to lower rates. Their next meeting is scheduled for July 30th, and right now, market watchers are closely eyeing the odds. So let me show you what expectations look like. According to the CME FedWatch tool, the market currently sees a 77.3% chance that the Federal Reserve will not cut interest rates at the upcoming July 30th meeting. That's just a month away, so the big question is, why are the odds of a rate cut still so low? That's because Fed Chair Jerome Powell recently reaffirmed his stance during a congressional hearing. He made it clear that he's sticking to a wait-and-see approach, emphasizing caution before making any moves on interest rates. The market is now anticipating that the Federal Reserve will begin cutting interest rates at its September 17th meeting. Let me show you what the current odds look like. Here it is. There's currently a 92.1% chance that the Federal Reserve will begin cutting interest rates at the September meeting. And this is expected to be just the beginning. The Fed has projected 2 rate cuts for 2025, so if the first happens in September, the second will likely follow soon after. Naturally, this shift toward easier monetary policy is something the stock market tends to welcome. Now, as you probably know, President Trump has been openly criticizing Jay Powell for not cutting interest rates sooner. However, Powell has maintained his wait-and-see approach, saying he expects inflation to rise significantly in the second half of 2025. Now, let's take a look at some key moments from Powell's recent congressional testimony on monetary policy. So, we're going to begin with this highlight clip. The question being asked is, why isn't the Federal Reserve cutting interest rates right now, especially when so many other central banks around the world are already doing so? Now, I know the text might be a little small, so I'll read it out for you. This is a list of central bank interest rates by country. The U.S. is ranked number 35, with the Federal Reserve's rate sitting at 4.5%. At number 33 is the UK with a rate of 4.25%. China comes in at number 22 with 3.1%. The Eurozone is ranked 9th at 2.0%. Japan is number 3 with a rate of 0.5%. And topping the list is Switzerland at just 0.25%. So to sum it up, Jay Powell isn't cutting interest rates just yet, because he's sticking to a cautious wait-and-see approach. His view, and the broader expectation, is that inflation could pick back up in the second half of 2025. And what's driving that concern? According to Powell, it's the uncertainty surrounding tariffs. Let's take a look.
Inflation expectations are firmly anchored. What is the reason not to cut rates?
Well, it's uncertainty about the size and potential persistence of the potential but highly uncertain inflation from tariffs.
Now, I want to lay out both perspectives so we can compare Jay Powell's and President Trump's views on interest rates. Here's Powell's approach. He's cautious about cutting rates prematurely because of the risk that it could reignite inflation. He believes the Federal Reserve can afford to take a wait-and-see stance since the economy and labor market remain strong. That's his viewpoint. On the other hand, here's President Trump's take. He argues that interest rates should be cut immediately. If inflation does pick up again, the Fed can always raise rates later, a year or two down the line, to combat it. Trump also points out that lowering rates now would save the federal government hundreds of billions of dollars in interest costs. With that in mind, let me show you the latest clip of President Trump making his case.
Because the rate's high, we have to pay more for debt. It's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. 3 points would be about $900 billion a year because of this very average mentally person.
Anyway, the market is anticipating that the rate-cutting cycle will kick off in about 2.5 months at the September meeting. Naturally, that's seen as a positive for the stock market. And remember, the market is always forward-looking. Now, the other key development is that President Trump is considering who he'll appoint as the next chair of the Federal Reserve to replace Jay Powell. And realistically, Whoever Trump picks is likely to be someone loyal to him, someone who will support his agenda of deep interest rate cuts. Yes, in theory, the Federal Reserve is supposed to operate independently from the president and the government. But in practice, things don't always work that way. Powell still has 11 months remaining in his term, and typically, the president announces a nomination about 3 months before the term ends, so we can expect that to happen around February. But here's the thing. Trump wants to make the nomination much earlier than usual in order to influence the markets and effectively turn Jay Powell into a lame duck. Let me explain with an example. Suppose Powell announces that the Federal Reserve won't be cutting interest rates for a long time, say, for the next 2 years. Naturally, the bond market would respond to that guidance. But now imagine Trump goes ahead and nominates someone like Scott Bent right now. And let's say Bent publicly states that once he becomes Fed chair in May, he plans to implement massive rate cuts. In that case, the markets would likely start ignoring Powell's guidance altogether because they'd be pricing in what Bent is promising. Essentially, Bent would be backseat driving, shaping market expectations even before officially taking over. Here are some of the potential candidates President Trump is considering to replace Jay Powell as chair of the Federal Reserve. And let's be honest, the unspoken deal here is pretty clear. I'll nominate you, as long as you're willing to follow my lead. What Trump wants, above all, is significantly lower interest rates, and anyone he chooses will likely be expected to deliver on that. Okay, so those are the current developments on the interest rate side of things. All right, please subscribe my channel and press the bell icon. Thank you.